Hello everyone, welcome to a product review at Phenomenal. Today we are going to look at the Motilal Oswal NASDAQ 100 ETF. NASDAQ 100 is one of the largest well-known indices in the US. It tracks the largest 100 companies, excluding the financial sectors. Comparing this to Nifty 50, this index dominates on tech sector, whereas the Nifty 50 dominates on the financial sector. So, why do you need to care about this ETF? So this is where I think international diversification comes into the picture, or even the concept of diversification comes into the picture. So let's say that in India, the stock market doesn't do well in the next few years, right? So your entire portfolio might be down. So having a diversification, especially in one of the best performing markets like the US, could make your portfolio yield better returns. And in general, having home buyers can be detrimental to your equity portfolio itself. For example, let's say you were in Japan or in China, right, where these countries didn't do well, like the equity markets in these countries didn't do well, but if they had diversified into the US or at least even the world index, right, where it tracks all the stocks as per market capitalization across world, the equity returns that you're getting from your portfolio might be better off than having just your country's index or having heavy home bias, right? And that's the reason why one should diversify their portfolio across countries, right? So today we are going to look at, as I mentioned, the Motilal Oswal NASDAQ 100 and see what's the significance of this to your equity portfolio in India. I am hoping most of us have ETFs or index funds or even stocks, mostly in the Indian market, right? And how adding this ETF can diversify your portfolio. Let's look into that in depth. So I think the first thing to notice is the strong performance of the US market as a whole, right? I think last 2 decades, US has been one of the best performing markets. You have companies like Apple and recently Nvidia in the last 2 3 years. It has performed well, and most of the innovative tech companies has been coming from the US, right? And you can easily see that in the equity market performance as well. So compared to Nifty 50, the Motilal Oswal NASDAQ 100 ETF fund has done relatively well since its inception. You can also see the excess returns as being mostly positive, and has been, especially during COVID times, it has gone really well because of the currency depreciation. One thing to know about this fund, as I mentioned before, this is heavily dominated by tech sector. So if you look at the sectoral composition of these two funds, you can see that Motilal dominates with 64% in technology sector compared to 14% in Nifty 50. If you look at what's the dominating sector in Nifty 50, it's the financial sector, right? So that's one thing to know about this one. Another thing is, as I mentioned before, the diversification aspect of it comes into the picture, right? So here you can see that drawdowns are not similar to the Nifty 50. Let's say you have a portfolio consisting of a Nifty 50 index fund. You can see that there have been times where the Nasdaq 100 didn't go as much as Nifty 50, right? So this is not a diversifying in like a drawdown sense, but you can also see, a difference in the drawdowns structure itself, right? Like these two markets doesn't go down at the same time, at least as per the data, right? So you can see that no, here Nasdaq went way below compared to Nifty 50. So there have been like times where the drawdowns have been cyclical and they don't go down at the same time together. So coming to the main aspect of this video, right, the diversification aspect of this international fund. So The first thing to know is, you can see a score of 50 out of 100 compared to Nifty 50, which has a score of 0, right? So basically, if you're investing in Nifty 50 fund, you're not diversifying your portfolio at all. Whereas Nasdaq is an international ETF, so relative to an index fund, which is the Nifty 50, you're diversifying your portfolio into an international security, right? So why is it diversifying? Is because of the downside beta that it has towards Nifty 50 index. So you can see that the downside beta, that is when the Nifty 50 goes down, the the Nasdaq 100 doesn't go in the same effect as Nifty 50. So that's why you are seeing a downside beta of 0.28. A downside beta of 1 means that it goes down at the same magnitude as Nifty 50, whereas a downside beta of 0.28, it's just a diluted. It doesn't go down as much as Nifty 50 when the Indian equity market goes down. So this is interesting. So when you add 25% of Nasdaq 100 to a portfolio of Nifty 50, you can see a big increase, almost a 0.3 increase in Sharpe ratio, and it's coming from high returns of the Motilal Oswal's NASDAQ 100 ETF, but also you can see a slight reduction in the overall drawdown when you're adding this equity NASDAQ equity fund. Now going into to see whether there are other funds out there which with lower costs, to see whether you can reduce the cost of this fund. So here you can see a bunch of ETFs and also mutual funds, right? Most of them are tracking the NASDAQ 100. Some of them are not exactly NASDAQ 100, but has similar performance to NASDAQ 100. So even here you can see Navi NASDAQ 100, right? Compared to the other index funds or the mutual funds or ETFs, right? I think Motilal NASDAQ fund is kind of on the expensive side, charging 0.58, whereas I think the lowest one is the Navi US Total Stock Market, which is not exactly NASDAQ 100, but it still gives you the international diversification. You can also see another Navi US Stock Market. I think this is the direct version, this is the regular version. But here Navi does have another fund in the Nasdaq 100 index space with just 0.15 percent, and it seems to be the lowest tracking the Nasdaq 100 fund. I think what we have learned in this video is about the international diversification and how it is important to diversify your portfolio across countries and take away that home bias that you have in your portfolio. We have also proven that it's from a technical analytical standpoint, the Sharpe ratio has increased. The returns are also have also increased since its inception. Also, if you look at the drawdowns, although this is not a diversifying in the sense when equity markets go down, it doesn't necessarily protect you. But the drawdowns have been cyclical because of the varying markets here. Because the Nifty 50 is specific to India, whereas Nasdaq 100 is specific to the US market. I hope you enjoyed this video and learned something. See you next time. Have a nice day.